This is the week that has changed everything for crypto. While the headlines have kept most people completely glued to the screen and distracted by all the panic that they have been promoting, the United States government has, in fact, triggered a chain reaction, or the chain reaction we've all been waiting for. President Trump is about to sign an order that forces banks to work with crypto, while at the same time, the CFTC, the agency that regulates futures and options, just opened the door for Wall Street to buy and sell real Bitcoin directly on big exchanges. This is as aggressive as it gets in favor for us in the crypto market and Bitcoin. And all of this has happened as the market put the odds of an interest rate cut at 95%. So in plain English, the world's biggest pile of money is about to get cheaper and easier to move than at any point since 2020. So if this does not trigger the bull run, I really cannot even imagine what else will. So these three triggers, policy, regulation, and fresh liquidity, all landed and happened within the same days. So for the first time in years, the people in charge are doing everything it takes to push money into risk assets like Bitcoin and Ethereum. Yet, unfortunately, the majority of everyone are stuck on the latest price drop. That's what they're focusing on. They're obviously not tuning in here, or they would know better. But anyway, what really matters is what's really happening. And that is, crypto is more solid than ever. So let's break down exactly what changed and how we can get ahead of it. So now let's talk about the regulatory shockwave. Let's talk about what's actually happening in Washington, D.C. President Trump is preparing an executive order that could penalize banks for refusing service to crypto companies or individuals based on their political views, which is only right considering we're supposed to be a democracy. So this means regulators would gain power to investigate violations of fair lending, antitrust, or consumer protection laws. And it could impose or levy fines or even refer cases to the Attorney General. This order would require U.S. bank agencies to roll back guidance that previously discouraged partnerships with crypto businesses. The Small Business Administration would be instructed to review its lending practices. Thank you, right? Aiming to ensure fair access for eligible crypto firms. And at the same time, the CFTC, the agency that regulates big US futures exchanges, announced that Wall Street traders will soon be able to buy and sell real Bitcoin, not just paper contracts anymore, all right on their main trading platform. We know that earlier this year, when spot Bitcoin ETFs launched, over $10 billion in new money entered in the first month alone. Now, the gate is about to swing even wider. All these changes mean American crypto companies and their consumers will finally have full access to the financial system. So for the first time, the rules are being rewritten in a fair way. So crypto is treated the same as any other business on Wall Street. The foundation for mainstream adoption is getting set, guys. Now it's about who sees and who seizes the opportunity first. Now let's talk about the liquidity tsunami that's coming. Right now, the entire market is on rate cut watch. The odds of a Federal Reserve interest rate cut in September have exploded to 95%, as I was saying a moment ago. Goldman Sachs is calling for 3 straight rate cuts starting in just a few weeks, and markets are betting on a full 0.75% drop in rates by January. So what does this mean for regular investors? Every time rates fall, borrowing gets cheaper, and there's usually a rush of new money into assets like stocks and crypto. In just one day this week, the US stock market added over $1 trillion in value. President Trump is already celebrating, saying there will be many more days like this, he says. And Fed officials themselves are now hinting at more than 2 rate cuts if the economy keeps slowing down. This is a major pivot from the past year when the Fed focused on raising rates to fight inflation. Now, with the job market cooling off, the signal is very clear. Money is back. We're actually seeing that Wall Street's big traders have fully priced in 3 rate cuts over the next 4 meetings. The last time the market moved this quickly towards risk-on mode was during the 2020 bull run, right before Bitcoin, Ethereum, and stocks reached a new all-time high. An injection of liquidity at this scale lifts the entire financial system, pushing up demand for both traditional stocks and digital assets across the board. And the numbers from corporate buyers are breaking records. Michael Saylor's company, Strategy, has built up almost 3% of all Bitcoin, adding over $43 billion worth since November. This kind of accumulation is happening at a pace that's changing the entire landscape for digital assets. And on the Ethereum side of things, BitMine now holds 833,000 Ethereum, valued at $3 billion. And they reached this level in just 35 days. SharpLink bought over 83,000 Ethereum for $264 million, and the Ether machine now sits at 345,000 ETH, which is about 1.2 billion at today's prices. And GameSquare has more than 15,000 ETH, worth roughly $52 million. It's just wild. And what's very interesting is that many of these companies use their Ethereum holdings for staking and restaking, and some are using the yield to fund stock buybacks or to add NFTs as assets on their balance sheets. So we're seeing a growing wave of institutional interest in Ethereum, just like we saw with Bitcoin back in the early days of the ETF and the corporate treasury rush. And I know the price of Ethereum hasn't grabbed headlines yet, but the demand is rising. So it means it's only a matter of time. More staking options are coming online, and there's more clarity on the rules. Ethereum's ecosystem is leading the pack in stablecoin growth, which gives it a huge advantage over the other blockchains. So let's keep a close eye on Ethereum and everything building around it, because this network stands out as a top contender for the next move higher. Right now, Italia, or Italy's parliament, is talking about Bitcoin as a strategic national reserve alongside their gold. And when it comes to countries building their Bitcoin reserves, this is still the very beginning. I believe the real race will begin when the US steps in to buy Bitcoin for its own strategic reserve. Once this happens, the world's most powerful countries could start accumulating quickly. It'll be that money grab you hear about all the time. Some major Middle Eastern countries could move billions into Bitcoin in just a matter of days when they make that decision. This early phase is setting up a global competition for digital assets. And the next surge of demand could come from nations, from sovereign nations. And it could completely reshape the supply and prices as we know them. These are gonna be like the good old days when we look back. That's why I don't want you to sleep on Bitcoin or Ethereum. They're giants. They're the foundation of our future economy. Ethereum's stablecoin numbers just keep climbing too. The total value, of stablecoins sitting on Ethereum hit a new all-time high of $134.8 billion. That's over 3 times what we saw just 3 years ago. This is real money fueling DeFi, lending, and daily trading. With stablecoins like USDC and USDT, anyone can move billions of dollars around the world instantly. No banks required. No questions asked, just send it and go. But now let's talk about Solana. In just the past 7 days, over 200 million has moved into Solana from other blockchains, with 113 million coming straight from Ethereum. Solana sucked in 41.86% of all new money flowing between networks. This is more than Arbitrum, Base, or any other chain last week. So with this much new capital flowing in, it's no surprise we're seeing major tokens in the Solana ecosystem light up on the smart money radar. Bonk, for instance, the top meme coin in the Solana ecosystem, was the most bought token by smart money wallets over both the last 24 hours and the last 7 days. So that's something worth paying a close attention to if you're tracking where momentum is building. And no, I'm not saying go buy Bonk. I'm not giving financial advice. I'm simply painting a picture of where money is moving and what kind of money is moving, right? Smart money investors means these are people who know. They've been around for some time. If they are buying bonk, that may be something worth checking out if you have the dispensable income. That's what I'm saying. And Solana isn't just crushing it online. Their new Seeker smartphones are now shipping to buyers in more than 50 countries. Tens of thousands of phones are rolling out, and each are pre-built, loaded with a Solana wallet, secure key storage, and instant access to over 100 Solana-based apps, which truly, as a marketer, as I am at heart and professionally, I would say that's the way to go, because crypto is hard. You would know that if you're here. It's like a whole paradigm shift on everything you knew, in terms of money and like how, it's like tech and finance met and had a baby and you're a single parent. No one's here to help you. That's the best example I could come up with on the spot. So for Solana's team to roll out a phone with everything pre-built in, so people don't have to figure out their own security and they don't have to figure out how to download a wallet, that's just really good, I think, strategic marketing. So anyway, what's the big picture here then? The total altcoin market cap is still sitting above 1.27 trillion, even after some rocky last few weeks, as we've seen. Major altcoins saw some serious dips, about 15% on average, and up 30% for a few big names. But the market is still holding its higher low, and that's a sign. And that's the level everyone's watching for a possible bounce. Its last higher low in last April. Now let's talk about the ultimate shakeout, okay? Because before I wrap up, I want to talk and I want to address the elephant in the room. This week, Bitcoin's ETFs lost almost 300 million in a single day, and spot Ethereum ETFs saw 465 million in outflows, okay? Also leaving their ETFs, which is the biggest one-day drop since they launched. And a lot of these people, and hopefully you're not one of them, but if you are, then this is for you. A lot of people see these tremendous outflows, which they are, and they get nervous. But if you dig into the numbers, if you lean into the numbers and try to understand them, you'll see a bigger trend, okay? Because even while the ETFs were seeing record withdrawals, corporate treasuries over here, okay, the really, really smart investors, they added 630 Bitcoin to their balance sheets, around 72 million in a single day. So do you see, I don't want to call it manipulation, but do you see how the market is being shaken, okay, by what greater forces? Some of them we know, some of them we don't know, but we do know there's a lot of off the record trading happening, okay? So we see market conditions that's scaring everyone, which makes them sell or withdraw. And then you see the really, really smart money buying it. What could that possibly tell us? Let's just think for a second, right? To me, it sounds like some level of market manipulation and definitely some capitalization of market conditions by really smart money. And this has been the pattern all month long, with companies stacking Bitcoin and Ethereum at the same time that many ETF holders are selling. Anyway, on the Ethereum side, large corporate and institutional players have put more than 5 billion into ETH spot ETFs just in July, with big inflows, even as outflows have been making all the news headlines. So this shows that institutions are using every dip, okay, to build their positions, to buy more. And they're not being scared or shaken out by the market conditions. So maybe we should follow and follow in their footsteps and do what smart money's doing. And if we look at historical data, average weekly returns after a major dip are positive almost every single year, including this one. Actually, since 1990, there have only been a handful of years where buying the dip didn't pay off. And those losses were actually minor compared to the upside. But we're also seeing cycle signals line up. On the charts, Bitcoin's ultimate oscillator, a momentum indicator that measures buying and selling pressure, is moving into what's called phase 3. In past cycles, this phase came right before some of the biggest rallies in crypto history. So it seems all the shakeouts and volatility that we're seeing is what sets up the strongest hands for the next wave. The market is shaking out the weak, that's what they say, and loading up the patient. So if you've made it this far in the video, you're now ahead of the headlines, ahead of the news, ahead of what the general public is hearing. In today's video, we broke down 3 things that are changing the game for everybody. First, as a quick little wrap up, Washington just gave crypto the green light. Banks and Wall Street have never been this open for business. Secondly, the biggest companies on the planet are stacking Bitcoin and Ethereum at record speed. And this race is just starting. And third, on-chain numbers don't lie. Stablecoin liquidity and real smart money inflows and altcoin market strength are pointing to where capital is moving before the rest of the crowd wakes up. And here is what this means for you. Every major signal says the next big move is taking shape right now. Not next year, not next month. So once again, if you want to be the first to hear these alerts, to hear what's going on in the market and hear my breakdown, because I do have a fantastic research team that helps me prepare every single video, then I would encourage you to subscribe to my channel, because this is exactly what we're going to go through in every single video. This bull run cycle, it belongs to those who are patient and have vision, those who can see their future and want to claim that future, and are willing to do the work and show up every day, stay plugged into the news, be tracking their wallets, the news being released by their top token holdings. That's who wins this bull run. And I did a whole deep dive actually on why I believe we're down to like 40 some days. I produced a whole video on this yesterday. If you want to check it out, feel free to check it out. I love you guys very much, and I'll catch you guys in my video tomorrow. Ciao.